Hello, testing, testing. 1, 2, 3, testing, testing. Hello, hello, testing, testing. Can you hear me? I can actually see my microphone moving, so I don't understand. 1, 2, 3. Okay, sorry. Everyone can hear me and can see me, yeah? All right, sorry. I'm getting ready now. If you can hear me, okay, perfect. So, welcome back to everyone. Yes, I think you can hear me now. Okay, perfect. Let's go ahead. So today I'm going to talking about something that many of you, I guess, get excited about it. Is that you start to jumping into the charts. We're gonna share now my screen in a minute, see if we can manage to make it work. So you will actually get, especially for those ones that are beginners or no beginners, you will actually thinking that, okay, I'm going to go for trading. And the first thing you do, automatically you're going for looking for indicators. So we're going to talk about indicators and how you can actually use in your advantage and how can be a disadvantage too. So what we can do is the follow. I want you to actually to first, as I said, we call it go and see the charts naked. Yeah, mean naked is you want to see the charts without being adding any indicators, but we're going to talk about the most popular indicators and how you can use them and see if it works for you. Okay, so let's go into that. So I'm going to stop share my face and I'm going to share the screen, and I'm going to continue talking about the well, I hope it's still my voice is still there. Let's see. Hello, testing, testing. Hello, hello. Can you hear me? Hello, hello. Okay, now can you hear me with my voice? I put the microphone on my on the chart. Can you hear that? Voice is low, but we can hear you. So it's supposed to be from my mic. Okay. All right, let's do this. All right, testing, testing. Can you hear me now? All right, let's see if you can see my charts correctly now. Let me go for this. Voice is low. Okay, I hope so it's better now. Let me increase the volume. Right, so I guess this is the maximum volume. 1, 2, 3, testing, testing. 1, 2, 3. Hello, 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 hello. Okay, back to screen. Show the screen. Okay, can you hear me now? Better? I will make my voice a bit higher. So that's it. See if we can actually get it that way. All right? Okay, better now. Okay, perfect. So let's go ahead, guys. So let's start to talking about what I mean with how to use indicators, how to use the charts to start with. Yeah. So everyone go excited. I want to trade now. Got my psychology in place. We have been discussed all these things before. Amazing. I want to be a trader. Amazing. So what am I gonna trade? Okay, I want to check indicators. So we're gonna go through some indicators, but what we're talking about first, the most important thing that you need to be aware of is that all the indicators, all of them, yeah, they're based on three elements. Yeah, maybe it's another option, but let's talk about the majority of the indicators. Yeah, they are based on three elements, which is actually price, volume, and the time you buy. So I mean the time frames where you go in and out. Yeah. So this is the most important three elements you need to be aware of. The majority of them, they are based on this, right? So what I'm going to do now is to show you how I will looking for a pattern. I want to trade. So this is actually a euro dollar is in daily. Yeah. Remember we say about daily, 1 hour, whatever we're talking about, any time frames, we're looking for to trade. Yeah. Let's say that we want to trade. In this case, we're gonna keep it in daily. But I'm going to show you now some indicators. Okay. So first we need to understand that. Okay, what is a pattern? So a pattern can be anything. Let's say that's what I say. First, look in the charts, okay? And why we need to look first the charts? Because I want you to first to looking for something on the chart, yeah. So what is the meaning of that? I'm looking for patterns without indicators. To then looking for indicators to add into my pattern. Okay, so we're gonna play with this guy now. All right, let's see. Let's thinking about a what can be a pattern. All right, so let's say that we actually looking for a, first you need to make the decision, am I going long or am I going short, or am I go both directions? Yeah, so let's think about that you're going to go in this case long, to simplify. Yeah, and then you're looking for a pattern. So what can be a pattern? Yeah, okay, I'm looking for let's say I'm looking for a candle cover the other candle. What is the meaning of that? Okay, I'm looking for I'm gonna look long from here, from this corner here, and I'm looking for a green candle cover the red candle. At that point, I will have an enter. Okay, so this is my pattern. I just make something up. Yeah, I don't know if it's a pattern or not, but I just take it up. So imagine this green candle. First, this two, it doesn't cover this red candle. This is actually finished about this, so I will enter here. Okay. So then I'm gonna do the same with all of them. This is my rule. I create a rule because that's what I can see. Yeah. So let's working out one more. So let's continue moving forward. Let's say now I go another candle. This has been covered by green. No. And this, no. Okay, let's have a look. This is just here. This candle, because those three doesn't cover this one. This is actually about this. So I'm gonna enter. First need to happen, and then I'm gonna take a trade after. Okay, so I will enter there. So I mean this is my enter. You see, it's above, finish above. The next trade I'm gonna take it long. Okay. We're not talking about exit. We're talking about only the entry. Yeah. Now let's go up for another one. We're gonna continue the whole thing. So we go more so what I try to explain, the most important thing about this exercise is that you must to look for anything that you can see first by naked charts. You can add volumes. Let me see if I can have the volume somewhere here if I remember. Yeah, go volume here. You can add volumes even in Forex, but obviously this happened after. You cannot see earlier because it's happened after banks or access. We do not have access, but you can see that in stocks and other commodities. Yeah, so you can add volume and actually create patterns with volumes. We're gonna work into that later. First, let's do only the transaction. Yeah, be patient with me on this case. So this is our strategy. We're gonna go every time is take the highs of the red candles. This is take the highs. No, we got this one here. This one is taking that one, but it keep going down, 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 and then we got this red here, yeah, and it's being taken by this candle here. So we take a long there, okay. So we take here, and we say, well, but what about this one? Okay, let's see this one here. So potentially this one is about this one here. So I take that one as well. I take a rule. Don't be cheeky and change the rules. Make a rule. So what about those two? It's nothing here, yeah? Those red, nothing above yet, okay? So now let's go for this one. This red candle, we go a green candle, okay? Enter. This green candle is above this red candle, okay? So we go for FAQs and all that, just ask me later. This is an exercise we're looking for to how to find things, yeah? We can do more exercise after. So I got this candle, green one after the red one, and this one is about this one as well, yeah? So shall we take it first because we have passed this one, and then we have this one, it will be this one here, yeah? So remember, this is past all this, no, actually, no, it will be, this is still on top of, this is about, the open and the close is about this one, yeah? So I'm talking about open and close, not the wicks, yeah? Talking about that first. That should actually explain that in my rules. All right, so now this one, if you see that, this one, the open and the close is about this red, but not that one. But we take this because it's about this red, yeah? So we take that red. Okay, keep going. So this red, do we have anything about? This is actually about, but not the open and the close. This one is not, this one, no. We got, okay, we got one red here, and we got this green is about open and close about this one. I take it, yeah? We need to take all of them first, okay? Doesn't matter how beautiful look now here, then we change something. No, we need to take all of them because we need to see losses and winners. Now, we got this one here, this is about, but this is the first one about this one and about this one. No, that's it. So we go one more entry. Okay, so this is our entry because I create a pattern, yeah? Pattern in my head. Now I'm going to add, let's say I'm going to add volume. We haven't actually looking for indicators yet. We're gonna play with indicators in a minute. So I'm gonna use volume, yeah? I'm going to see if now the volume makes some patterns into my pattern, yeah? So let's have a look. Now we're gonna go for, let's use, I don't know, this one here. So let's see if we can get something. Okay, this is red. I don't know, I'm not gonna look into something because we can see this is going above 3-4 days consecutive, then we go red. I don't know, this is another red, it's not red. Okay, so I don't have a pattern. This is actually green, red, I don't know, we need to find some idea. This is actually downtrend and it's going up. So it's calling diversion, yeah? So we go, this is up, but this is going up. This is what diversion is like. This is going, we can call it up and down. I'm not gonna even call it diversion because it's gonna make you complicated. Let's think about up and down. This is going down, this is up and it's green. This is actually up and it's actually red. So this is what, green. You see, look, it's stupid, yeah? But it's not, trust me. Anything that you can see, anything can be a pattern and you can make money from it, okay? Be aware of that. Okay, now we're looking for a entry here. This is down compared with those two. This is actually downtrend and it's up. Okay, this two is downtrend and it's up. Yeah, so we can call it, this is down from there, yeah, and it's up. This is down from there, it's down to there and it's going up. This is actually from there, this is up, so it's not the same. This is the same. What about this? This is up, so it's not the same. What they mean it's a pattern is when you have we go from up to down is entry. So let's say from there we go down, yes, we got this one down. This is up or down? This is up and this is down and this is down and this is up. Okay, I explain to you what I've been seeing now. Okay, this, what I mean, of the previous candle is from volume up to volume down, yeah? So this is one. So this is not the case. We go first look up and then down. Okay, so we're gonna remove this one. They are not the same. This is gonna go. Now, from this one, the previous candle, volume is up. I'm not talking about red or green. I'm just talking about from up to down, less volume, yeah? So from there to there, we go from there and we go to there. So this is correct, it's okay. But this one, it went from short to a small amount of volume to too much volume. I'll remove that. Now from there, from low volume, from high volume to low volume, I enter here. This one, from high volume to low volume or lower volume. This one, from high to low, I remove this. From this one, from high to low, I keep it. From this one, from high to low, I keep it. And from this one, from high is the opposite. I remove it. So this is now my strategy. All the candles are showed on a screen. High volume is not shown. Only candles show. You don't see it. Okay, let me put it up bigger. Okay, hold on. Let me close that there. Sorry, apologize. Yeah, let me see if you can see now. Thanks for that. Seems to be that I need to adjust the screen correctly. Can you see the volume now? Okay. Let's see if I can adjust it accordingly. 1 second, guys. Hold on. Okay, can you see now the bottom of the screen? Let me see a bit more. Hold on. Now, I believe you can see now. Okay, perfect. So now let me go back to explain about the volume. So what I was explaining is like you see in this, let me see if I go back. Hold on. Go back. Go back. There. Okay. I removed these ones because the volume. Okay. Yes, I'm gonna explain again. So if you notice here, this volume was actually lower and they went from high volume. This one here, it went from high volume to lower volume. This one, it went from lower to lower. So I tried to actually to see if it's going from high volume to low volume. If it's the opposite, like the example on this case, it's going from low to high, I remove this, yeah? So in this case, this one, it went from low volume to high volume. This case here, it went from low to high, I remove this. And then I'm gonna go back. And this one here, it went from low to high, so I remove that. The rest, I keep it, yeah? So I just make 2 rules of my strategy. I made this up now, yeah? But could be a strategy. Now, this is my entries. Now, visualization is actually a good entry or it's not. This is a good number of days winning. This 2 days winning. This is not going anywhere. This is potential is making 2 days of winning. This is not going anywhere and this is not going anywhere. So I would say 50% of probabilities to win, yeah? Not much. Now, this is my volume, this is naked. Now what I'm going to do is going to add some charts on that. Yeah, so what I'm going to do is to add a typical indicator that people love it. So I'm gonna remove first the volume to don't feel it's that heavy. I don't need the volume anymore because I already made my decision. Now what I'm gonna do, if after looking the charts, I'm gonna see if there is anything that I can use to make my strategy working well. So I'm looking for something that telling me this is a good entry and this one. Yeah, so what I'm gonna do is looking for, let's go for indicators. You're gonna see a lot of indicators in here. So let's go for typical MACD. This is MACD, yeah. And automatically I got already the crosses. Okay, I should not have the crosses already. So let me show if I can see because I already prepared that in advance, but let me see if I can show you the classic MACD without my indication off. Okay, now, so can you see let's see if you can see the crosses and the all the stuff. Let me see. All right, can you see that? Yes, now you can see that. All right, volume is after candle is made, we enter the candle as per strategy. But volume will show only after candle is being made. No, yeah, no, this is actually an example. It's not. I understand what you mean. Yes. So this is to give you an idea of is after. It's correct. Yes. But what we're looking for is something not on the case it happened. We're looking for something happened before. Okay, something that it give you. You need. This is not my entry. I'm gonna look for an entry based on indicators. This is what I can see. Okay, it doesn't mean if I don't mean I'm not gonna take it this now. Okay, now let's see what actually show me. If I make this, can you see this buy and sell? Let's say buy, sell, buy, sell, buy, sell. So I just add to my indicator to tell me when to buy and when to sell based on the crosses. When the cross happen, buy. What does that cross mean? Let me show you. See, this is a cross. So it means these 2 lines, you don't need to understand now what is the meaning of the MACD. You can actually digging into, and I recommend that if it's going to be your indicator, I recommend that you play with it, yeah, that you understand how it works. Now, I choose MACD because it's one of the easy ones to use, yeah, and you need to understand this one, and there is only ones like a Bollinger Bands, and all the, I will tell you which indicators I use myself, yeah. So now, I will buy here. It does correspond to my entry, yes, it does. But this is for sell. I'm interested in sell because I'm only going to buy. Now, do I have an entry here? No. I got those 2. Do I have an entry before my entry? Yes. Do I have an entry before my entry? Yes. So then, will I consider this as a good indicator to replace my visualization? What do you think, guys? It's a good idea to take this entry. It will be amazing. But I will miss this. I will miss those two. I will not miss this one, but this is not going anywhere, and this is not going anywhere. So what do? I keep it or I don't keep it? You need to make the decision, okay? So now let's go for we're gonna keep it there at the moment, and then we're gonna use another one. Let's go for either side. Yeah, let's go for either side. RSI, this one. Yeah, let's see if it's shown properly in the charts. Yeah, and now we got other side. Can you see that as well? All right, so we're gonna make some lines in here. Okay, so we're gonna play with first I'm gonna make a solution, a direction of my entries that I saw earlier. Don't get lost. I know it's difficult, but this is what we're looking for. Yeah. Now, can you see anything that can help us to understand that is a good entry now? So we got first our first indicator. So it's going long. I don't know if I'm gonna use the MACD because it did missing a lot of my entries. I go missing this entry, I go missing 2 entries. So I say I'm not gonna use it. Let's say I'm not going to use. So let's use another indicator. So now what do we have here? We go across here on the other side. Yeah. We go exactly on top of the entry other side cross. Yeah. We got something here before, and we got something after. So this is look like it's a cross here as well. Then we have here, we don't have a cross here. We don't have a cross here. Now, this is looking interesting to me because, well, which one are my losses? So this one is not going anywhere. This is actually going somewhere. This is not going anywhere. This is not going anywhere. So actually it's a loss. So this is going into some place, and this is going someplace, and this as well, this one here. So if I remove those ones, because this is actually a cross after the cross here, let's see if you can see that. There is a cross here, there, and it happens the entry, yeah? So cross happened, then you have the entry. Let's have a look if I can. See, there, that's the cross. Now, I'm going to remove the non-crosses, yeah? So this is non-crosses, 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 okay? So, then we have those 3. Now, people are thinking, okay, but this has happened after. Yes, it happened after. So what is the cross here? This is the cross down there. There. Okay, so we go across here corresponding with the action to the buy of the other one, you know, the MACD. But we have as well this cross, and we got that cross, and it corresponding on the same place. Now, how far is going after that? It's like, okay, let's measure that. I'm gonna see how far is working this out from this here. So this potential visualization, I'm gonna use the cross. From the cross happen the day after, you got 2% growth. Okay, from there to the cross after is just 0.32. From there to there, the maximum you can see here is just 0.69. Okay, so this is my projection. Yeah, and you're thinking, well, but it's not good. It's not enough. It's too small. It's not okay. But we have see a very, very good profitable trade here of all of these 3. This ones it will not maybe make it break even if you move your stop loss correctly. Maybe it's not. It's like you need to think about that. This is actually making some maybe little money because it's 0.69. This is a make big profit. But it's something happened that both of them corresponded at the same time. Yeah. So now, if I'm looking for only this when it happened at the same time, how often this has happened? So this was a small sample. What I'm going to do now, I'm going to make it bigger. Yeah. And I'm going to reverse instead of looking what I will see, now I'm going to look for both together as an option. So what I mean with this, I'm going to look for all the crosses and then an entry. So I'm looking for crosses. Then here we go. So do we have here? There is a cross, and then we have an entry. So this is an entry based on that rule together, and it's moving up nicely. This one there, we got another one. And it's here, and then we have another cross here, but there is no corresponding. Another cross there, and it's not corresponding. It's after. This is actually crosses where here, and it happened after. this is happening there, and the cross is after, so it's not happening. The cross is just there, it's not corresponding. This one is, where is the cross? It's just there, corresponding. We take that one, okay. This one cross there, a corresponding. Okay, this is an example. I'm not gonna continue doing this more, but just to give you an idea, we can do one more maybe here. No, nothing. All right, so now I noticed that I follow the rules of my indicators because I was looking for something and something else coming up. Let me show you. So now from there to there, I have 2.39%. From there to there, let's say that if it's minimum 1%, I win, if not a loss. So this is a loss because 0.48. Yeah, let's make it red. Let's make it red. Red. That's a loss. How do I make it red? Yeah, that's a loss. They keep it green, black if it's a winner. That is obviously a winner. Yeah, this is a winner. This is a winner. This, I don't know. Let's have a look at that one. Let's say from there, there. So we talk about 0.73 is a loss. And we say minimum 1%. Just to give you an example, maybe your rule is less. When you just zoom in, this could be an indicator to use for actually for another direction. And what about this one? We said that minimum 1%. So let's say from there, and it's not even 0.6. We're gonna make this as a loss, yeah? So now, okay. So based on my rules, based on my visualization, I got a total of 3 winners, very big winners, and 3 losses. I'm 50-50, but actually I use the indicators, the MACD and RSI to create that based first on what I can see. You see, it's not about to looking first the other way around. To go into the indicator and look for the crosses, how they correspond to each other. No, first you need to know what you see. Now, we're gonna go, then when you see it's correct, you need to understand why we need to know what is happening, what you see there. Because you already actually define a pattern, you already defined the history of your trading, you define this history of your trade earlier. So then when you got these crosses here, let me see there. Now, when you got this, what is telling you happens? Can you see something on this pattern when you go inside and you're looking into a smaller time frame? Can you tell the same thing you're looking for when you're looking for these visualization patterns? So then you're looking for a small time frame when this is happening. You say, I'm going long when this is happening. But how I took the entry? How do I work out that? How do I work out? But first, as you see, something like that. Now, would you like to know the exit? Well, let's use another indicator. Now we're going to remove this. I got an entry, I got direction. And I'm going to use what is called, let's say, which one I can use? Bollinger Bands. Okay, let's do that. This popular one. Hold on. I think I've used a long time ago. Bollinger Bands is this one here. Okay, this one. Now we got Bollinger Bands. Okay, so I'm going to use this for my exit. First, I'm going to remove the. How do I remove this one? It's down here. Hold on. Let me remove the other ones, this one here, the gone, no, okay, all right, so go a formula there as well. You don't need to see that. That's formula from where? Okay, can you see the screen properly now? Okay, let me go a bit up, there up. Okay, can you see the screen? But when the show after that, okay, let's see. I'll try to make it squeeze a bit to see it. To show you the exit, an example of an exit, yeah? All right. Okay, please bring the little down. Okay, what about up now? It's okay now? All right, I think it's on place now. Okay, now what we're going to do is to actually looking for a exit. Okay, so now we notice that our entry is going to take this direction. It's an example, yeah? Now, where we can get out. So for example, we can use an example of when my trade is touch the blue line, or when my trade is only going to use the strength only when my trade is out from the red line. So means this is the red line. Let me show you this. So this is the red line, is going up, 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 up. And at one point, you see that the open and the close is below the red line, which is this case here. So my exit will be in here, there, okay? So this is looking for an entry in a small time frame. My exit is here. So it means after this has happened, or my exit will be in the next candle. So this is another entry I have. So let's do the same thing. So I go in, and then my entry. This is actually above from the red line, and this is my exit, okay? So let's go again. So I got, this is my entry. Remember, this is the pattern. This is different. It's not anymore the entry. So now looking for an exit. This is happened after, so I'm out there. Oops, what does that happen now? Okay, this is an entry, and I'm looking for red. It's not even happened, so I lost the trade. This is actually a loss, by the way. And this is a loss as well. So now we have a, let's say this is exit. We can put in another color. We can put it in green. That's a beautiful winner. And this is win. And this is win. Okay. Okay, so we have take 3 trades, or we have take 5 trades, and we have a number of winners. So now you see, what I want you guys is not to actually to create a strategy of what I'm giving you. I'm just telling you that anything can create a strategy. The key is to actually to see first a pattern. It's not the way all the way around. You do not actually look in the charts from indicator's perspective, because that starts to giving you what they want them to be see you. You don't want to see that. You want to first to looking for a pattern from yourself, understand that first, and then moving into. So let me go back to my face now. Okay, I think that's, I don't know if you guys got any question at this point. Hold on. All right, let me go back to my normal setup. So I hope this is clear for all of you. So let's recap what I might actually try to explain to all of you as a basics. People that don't understand these principles, and as a very simple basic is that how do I create a strategy and a stop loss. That's not the stop loss. You will go into a small time frame, so it can be worked out the same way. It's the same principle. Well, but one second before we go into the details, because remember, is in even the exit. Which one is the exit? Is after that can be an exit, but what is exactly the exit? What I'm just telling you is first the setup of the direction. If you understand the process first, let's actually recap. Yeah. Step 1 is to see a pattern that you can see on the charts naked. Okay. Step number 2 is to start to see if there is indicators, famous indicators, without modifying the indicators, without touching the indicators, just keep it as everyone using it, to see if there is any correlation with it. Something that can help you to enter before. You always follow the same rules. Doesn't matter how many times you lose. You saw me that I got many losses. I was looking for a pattern. I have an idea in my head, and I try to make sure that I got something that can help me to have an entry. But in reality, I was looking for the direction of the market, long, short, whatever you want. Then from that, you start looking for, okay, which indicators corresponding to each other that related to my entry before. Now, do I have enough entries? Do I have enough winners? Do I have, now, where is exactly my entry? Then that was daily. That was the direction of the market first. Now, I'm going to go in the small time frame. You're going to go into 15 minutes. I'm going into 3 minutes. The minimum, and the reason behind 1 minute is too noisy, 5 minutes is too slow for me. Okay, but 15 minutes is good to start with. If you're jumping from daily to 15 minutes, 1 hour, and you're looking for pattern, I think 15 minutes is good. 1 hour is a bit too slow for 1 hour, from daily to 15 minutes for 1 hour, sorry. So now you're looking for, you know where the direction is based on a visualization pattern on the bigger time frame. Now the same strategy of looking for a pattern for an entry on the long direction, on the direction of the market, now you can actually define your same entry. You can use the same rules that you apply, or you're looking for something else inside of the patterns of the same time frame. Do not change the time frame when you're looking for an entry and exit. You changed when you know you're looking for the direction. That's what you're looking for. I got a direction. That's my signal. It works fine. This is long. This is actually my signal to get out of the market, and out of the market Okay, this is my signal to get out. Doesn't mean that as you exit, exactly, because you haven't gone into 3 minutes, 5 minutes, 15 minutes entry or exit. Yeah. So then is the key is to actually to zoom out, know the direction, then you look in zoom in to look for an entry. Okay. But the most important thing is that you are actually focusing that in visualization. You need to see a pattern. And obviously many of you will say, oh, but I like your strategy already. Whatever, make that. I just made that up now. It's an idea. It could be many things. Maybe it can be a combination of 2 green candles. Maybe I need to be weekly. Maybe it need to be whatever you're actually looking for. It need to be something. Then you actually combine with indicators. Why I do that for? Because they give me data quickly. Okay, if you notice, it was very fast to go back in history and get 3, 4, 5, 6, 10 entries. Then I can have a data. Right now myself, I'm back testing my Mega SG and I'm testing 15 years of data, and it was exactly the same way. First I'm looking for a pattern, yeah, and from that pattern I went to use indicators, and from the indicators I start to go into zoom in into the trade, and from the trade as actually how I can manage the trade, stop loss, target, and so on, and how to add more money. So all that is coming after. First you need to know the most important thing you need to be aware of is to find the market direction. Don't try to work into reversals. Don't try to work into head and shoulder reversals. I know that people like that, to be on the top of the market, at the bottom of the market, to be the magic bullet of being trading $100 and make $10,000 because you have the best one. How much backtesting you said to do before taking into? So, okay, this is a good question, yeah? There is not enough backtesting ever. So what is the meaning of that? Okay. For example, right now the market is being changed, I would call it, since Trump. It's the biggest thing happened. Before Trump, we got the war, Ukraine, Russia war. Before that, we got Israel against Israel, Pakistan. And then we have, before that, we got a cycles of the economy, kind of, yeah. And we have then COVID-19, and we have the 2008 crisis. So we got things happen in the market based on the macro overview. Something big happened, yeah. And the market start to take directions. So when means is that where is the big amount of data to be collected? Now at the moment Trump is the president. Is what actually changed the market direction. Imagine there are war coming, any war, the third world war, the war in between countries, whatever happens, then what do you need to do? You automatically, markets will change it. Trump or no Trump, something bigger happens than Trump, then things will change it. So then how much data need to work when President Trump became president? So since this month of this year or what year? Okay, then from that moment, backtesting forward. Yeah. Now, is that enough? It's enough to trade it now, but is that enough for actually to working out your strategy? And the answer is no. Because if you do not have an entry, what do? Backtesting, more data, other cycles, from Trump to the war, Israel and Pakistan, from that to Ukraine, Russia, to keep going backtesting more and more data. There is no ended. People say to me, what do you do when it's not trade? Backtesting. You backtesting after 25 years? Yes, I do. I'm still backtesting. What do you do with your time? Okay, my time is I trade in the morning. People say, do you trade every day? Yes. But do I really trade? Or do I backtesting? So what I do in the morning, I wake up at the same time, 6 in the morning, do my meditation, I do my walkings, I do my stretchings. Yeah, I have my coffee, I go into the computer, and I'm looking to see if I have an entry. If I don't have an entry, what do? Am I going somewhere? Am I looking for another entry? No, I just go an entry. I go my strategy. So what do? Very simple. I just do backtesting. So if I go decide that I'm going to trade 2 hours in the morning, 3 hours, 4 hours, 6 hours, whatever you want to do, and you do not have a trade, what do? Backtesting. Simulations of your entry. How I will handle this. How do I manage this? Is the risks correctly? Do I actually have the right spread? And so on. And you're looking for the data of the data. Constantly backtesting is never enough. If you do not have more backtesting, focus into the entry. If you don't have enough back entries, focus into the backtesting, the stop loss, the target. Can I change this? Can I change that? Can I add this? So the key of my successful situation as a trader is not because I'm trading all the time. It's because I'm back testing all the time. That is the most important thing you need to do, is constantly focus how I can improve my strategy. Because that will keep you always confident and no doubt in your strategy. Now I'm back testing. It's called Mega G, which is part of my other strategy. I call it Mega because first it was a G, before a G was STT, and everything is follow up the same pattern. It's the same strategy, but I'm being developed entries by entries, follow up the same story of my own strategy. Now what am I gonna do? I got an entry after my entry. After the STT, I go another entry with the called a G. After the G, I go Mega G. I go another entry. What do? I go a story. Now, how often is happening the Mega G? It happen every year, happen 3, 4, 5, 10 times, over 28 pairs. So, but how often is happen after 15 years, after 20 years? This is actually is it something normal? Is something new? Is something happen time because now we have Trump in there, or something happen time to time? So then I got questions, and then I eliminate the doubts. How much I can risk over the next 10 years, over the next 20 years is the right thing? How many losses I have? So what is enough? There is never enough. It's always you need to do back testing. Always a new question coming up on your back testing. You study the whole 20 years of your new idea. That's how it works. No, I got a new idea. This is the best one to do now. I'm going to trade this now, and 1 year is 3, 4, 5 entries is enough. No, forget about that. You need to actually focus in the quality of the content. You need to actually have enough data. It's not because you got new entry now or variation of your entry, you forgot about your 20 years of data. Yeah, I'm telling this to yourself and to myself. Yeah, because sometimes I want attentive to do that. Oh, this is a new entry. This is better. I for sure works amazing. Let's take it. No, just back testing. Start for 1 year. Cycles of economy. I will start testing maybe 2000, half of the middle 24 to now. Yeah, and then it's not because Trump is a bit more. Yeah, to see a bit of the difference. Yeah, then you got more beginnings of the 2024 and so on. Yeah. So as I said, first you need to know the direction, then you need to work in your entries, stop loss targets, how to add more, how to manage. So it's actually correlated to other pairs, it's correlated to other indicators, it's correlated to other commodities. It's so much work to do. It's never ended. Ask more questions and figure out the question by back testing. So there is never enough. Okay, so let me see if you got guys any. There is echoes in your voice. Sorry about that. Because I probably got the two microphones on at the same time. Hold on. Can you hear me now better? Hello, testing. Let me see. Okay, so I think now I got only one microphone. Did have two. Sorry for this. It's the first time I try to switch off between setups and two screens on live. So it's still echo. I don't have more microphones, I believe. Okay, hold on. 1, 2, 3. Testing. Slightly echoed. Hello, testing. I don't know. Understand your point, but how do you decide when you take the strategy live? You just need to take it. Okay, what do you have? That's a good question. Why do I take my own strategies? Let's think about this for 1 second. Yeah, well, it's pretty much when I finish the data of that cycle. If I make the design, first I need to make the decision. I'm going to back testing 1 year, 2 years, whatever I design, 6 months. Do I have enough data? Do I have enough entries? Because you can have a year, but only 5 entries. This is enough data? No. I need more data. 100 trades, 200 trades. Then from that point, you can actually make the decision, say, I'm going to take this. I'm going to take this strategy. I'm going to trade that. So you feel that a bit confident on that. It's a bit, always going to have doubts. Always. Or you like, uncertainty is always there. But you must make a decision. How many years of data are needed? Then when you make that decision, what is the data telling me? Then you say, okay, I'm not 100% sure, but I have something. Okay, let's go for it. Let's test it in real life to see if what I've been seeing is corresponding to actually being seen on my back testing. Then say tick box, yes. It's not working well. It's not what I was expected. You got the more losses than expected, more risk than expected. Then what do? You go back. More back testing. Something is not actually right. It's supposed to be loss maximum. Let's say that you come up with an idea that maximum loss was 5 times consecutive, but now I got 20 of 10. I said, this is not working as I was expected. Then you start to have doubts. What do? You stop trading, back testing more. Yeah, this is the way to do it. There is not, and when you stop having doubts, no, never. You always back testing to reduce, always to make you strong. Okay, if you test a strategy on one instrument, will you take that strategy for the other instruments or life? What? Sorry, I'm not lost in this question. Or only on the instrument that is back testing? On one instrument, would you like to take the strategy? Well, okay. My way of trading is, I would say, is no normal, because I do not trade a strategy, I trade psychology strategy. So what is the meaning of that? I trade uncertainty, I trade fear, I trade panic, I trade overconfidence. So before I'm going, like I show you a simple way of actually defining an entry based on visualization, my question is, if I see these movements, what people was thinking there? There was actually overconfident, there was unconfident, there was fearful, there was a panicking. So what actually telling me? Then I make my pattern based on uncertainty, based on panicking, based on fear. So for example, the STT, that many of you know about STT, I call STT for you to understand what does that actually mean. Symmetrical triangle theory. But the reality is uncertainty. Simple like that. But I'm not going to call it uncertainty because nobody will say, well, what does that mean? So what, this is a triangle. Okay, that's what you see. But that's what I'm going to call it, a triangle theory. So by the reality is uncertainty. That's what I've been trading. So in my head, I trade that. Why? Because that way I can actually define what is the difference between one thing and another. Now, if I trade uncertainty, I can trade anything. Now, the same apply of your indicators. If your indicators works, or what we have done today work on euro dollar, can you actually go to pound dollar? You need to do back testing. You do not trade anything that you have no back testing. You cannot trade it if you don't know how it works. So if it works well or not, because you will have doubts. So actually the number of losses you have in euro dollar is not the same number of losses that you just mentioned now here on gold. So you always need to be aware of that. It's what actually works for me may not work for others instruments. So what works in euro dollar doesn't work in gold or pound dollar or other correlations, because it can be the question. Correlations, what does that mean? Okay, well, so one instrument is going up, so other instrument is going down, especially Forex. But what is the meaning of that? Pound is going up, maybe euro is going down. If it's, I don't know, the euro dollar, or let's say euro is going up, dollar is going down. What is the meaning of that? Dollar is going down, stocks is going up. Maybe it's gold is going down, if oil is going up. So then you need to understand what works for me, what doesn't work for me, based on my strategy, based on my pairs. So when my pair is actually going down or up, what they do in other instruments. Yeah. So this is important. Or if I trade in the strength of the euro, let's say euro dollar long, do I trade all the pairs euros long and all the dollars short? Would that actually increase my risk? So can I take it? Can I not? So you see, you need to understand that correlation too. So to be simplified this, the best way to do it is just say one instrument at a time. And you say 1 year at a time. And then add another year pound dollar, then you add gold, then you add whatever you want to trade, then you need to backtest in the same amount of time that you backtest in another one and see if there is correlation with each other. That's how you move forward. And many people say, oh, there's a lot of work. Sorry, this is trading. That's why the majority of you that don't take this seriously and they're thinking this is, go find a pattern, let's trade it, and excited, you lose money. And again, and again. Another entry, another strategy. This must work very well. You lose money. Why? Because you just jumped from one strategy to another without backtesting properly. And because you just follow a pattern doesn't mean you will go for all of them at the same time. Yeah? Okay. So, okay, let's see if you go. If you test an strategy on one instrument, will you take that strategy for another instrument to the life, another instrument? Okay, I think I have answered that question. But let me know if this is not clear for you. Okay. All right, guys. So we have finished for today. I can see that many of you. Always one of my friends here asked me questions, which is quite good. Pride, yes, called. And there is not many being coming up. All right, so you told always previously when we heard that professional traders have very little drop down. How do they manage if the strategies cannot perform over years? You stop trading. The way you actually do that is stop trading. So that's the only way. So how you manage long loss drop down for a long time? First, you need to know your strategy, and you need to know how bad is your strategy can go down, and that is coming from confidence. So how you manage that is you stop trading. So let's say I want to lose maximum in a year 20%. Yeah. So you say, okay, this month is 2. So if you lost 2% on the day 2 of the month 1, you stop trading. That's it. You say, well, but then you can miss a good entries. Yes, that's my question. But you lost the control. You're risking too much. Then you're out. If you're thinking that you go 10 trades in a month on average, first the question, how many trades I go on average? I say 5, 2, 3, 4, 10. So if I go 10 trades in Monday and Tuesday on the first day of the month and I lost 2%, I'm out. Now, if I lost 2% on the first 2 trades, it's because I'm risking too much, because I'm supposed to have 10 trades in a month. So I don't need to risk more than X amount of percentage per month. So you see all these calculations you can make it in. As a professional, you're looking at a lot of mathematics behind all the time. All the time we make working more time. We spend more time in backtesting and calculate our numbers. So we make our numbers again and again and again. So this is the way we work. So, and that's how we protect our capital, is to stop trading. To stop trading, not to trade too risky, and sometimes happens that it's not inevitable that we go in a lot lower. So let's say that if my maximum loss in a year, let's say is 20% or 10%, and I lost already 6% on the day 1, man, you just lost the plot, because it's still another 300 days ahead of trading. So you lost completely the plot. Stop trading. So you already have lost half a year. No, but I need to go back, I need to trade, and you go a problem now then. Professionals, we don't looking for that. You just lost money on the day 1, day 2, day 3. That's it. You just out. So you need to stop. That's it. You need to stop because you have made the wrong calculations. So, but the first question is, how much you want to lose in a year? And people ask, what do you mean in a year? We just want to trade today. How much I can lose today? I got a free funding account. I got a funding account. I got how much I can lose today? $500. That's okay. No. How much percentage you can lose in a day? 0.1? 0.1? Seriously, that's little? Yes, that's little. So you need to think about that. You need to think about that, how much you want to lose in a year, because that is your reputation. Yes, that's line and your reputation. You cannot actually, and what I'm talking about first, reputation is not only reputation for people to see, like a trader see what you're doing. Reputation of your in your own house, if you lose money, you don't make money. If you don't make money, how do you pay the bills? You're a trader. So if you tell your wife, sorry, I lost the money for the rest of the year, how do you do that? Yeah, because that's painful. She wanna demand on you, okay, where is the money to pay the bills? Okay, imagine that what she doesn't work. If it doesn't work, put okay, got money from another side, but you already have lost money, so you don't make money, you lost money. So you make less than making. So you see, that is important that you rely on other people as well that you're gonna make money for. So it's talking about trading, that's it. So yeah, this is need to make a calculation of how much you can lose in a year, how much you can lose in a month, how much you can lose in a week. And sometimes it is how much you can lose in a day. For me, I just go week by week, month by month, every 6 months review, and every 12 months. So this is the way it works. You see? All right, so that thing is done for today. So we come back next week or with more topics like this one. If you got any specifics, let me know. But I've already been set up the webinar for next week and what we're going to talk about. All right, guys. So see you now. Bye now. Let me see how